Hello, this is Joe. Ask Joe About Money, and it is February 21st, 2023, and we are doing the after market daily review. So today was a distribution day, and what happened today is we had a big gap down. We had an initial push up, and then we reversed down with a big red candle, and we pretty much sold off the entire day. I kept saying, because of long-term, I'm always looking at context of where we are because I'm looking for bigger moves. We've been selling here. We had leg down, leg one. This is now we're on a 60-minute chart because it does matter where we are overall, and because it doesn't mean that you couldn't make money short today. But what happens is we had one leg down, pull back, leg down. That includes the gap. The gaps are included in the leg down. So now, I mean, from the top here, 41, that's about 140 points, and we're at support. Now again, that does not mean I actually took a short trade today. I'm going to show you in a minute, but I'm very cautious. As a matter of fact, I took the short trade with quarter size today, and the reason why that was because I know that we're at a support area, right? So this is where we want to look to buy, and this is where we want to look to sell. Again, it does not mean that the market cannot go lower. Of course it can. As a matter of fact, markets that are oversold tend to become even more oversold. So I'm not against that, but I'm aware that we are at a critical state right now where this could be, when we look back, this could be support. But let's take a look at how the day played out. I took only one trade today. I was very patient today, and the reason why I was very patient today is because days like this, I mean, if you're short, this is a day that you just want to hold short. But if you weren't able to get short right off the open, which I was not, and the reason was because when you open this far down from the moving average, okay, let's just kind of zoom in here for a moment, okay? So when the open happened today, this is what we're seeing here, right? So this is what we're saying. So we're opening so far down from the moving average, big green bar, very non-committal bars, big red bar, another green bar. So to me, if we're going to be this far from the moving average and we're not seeing really big red candles, I'm not going to be going short because I'm shorting, in my opinion, too low. Now, it turned out that the market went lower, so it would have been good to short below this bar or short below some of these bear bars. But for me, okay, I did not. And the reason was and even when we got here, this was at about 10:15. I mean, look at this action right here. I know we know now that the market went lower, but this to me looked like it was some type of bottoming action. As a matter of fact, right around here, I was looking for a potential long because we had this bottoming action right here, and I was looking for a potential long here, and I had this here to say, if there were some big green candles we're buying, I would have considered a long here, but we actually ended up failing at the moving average. And again, I was not willing to take this short here because I wasn't part of the first leg. So for me to be shorting here, this should be an add point if you were already able to get short. But because I was not, again, we have to manage our own trades here. The market was in a distribution day, and then we converted to a trading range at the end of the day, because this was a climax sell right here. This was a climax sell. We had all these red bars and then two big green bars. Now, what I want to point out is the trade of the day, and it actually ended up being a scratch trade, but this is a trade when you see sustained selling. I mean, we were below the 20-period exponential moving average the entire day. We couldn't close above it. And then here, this is what we call a bull trap. Again, this is all about context, okay? Because this pattern by itself doesn't mean much except for the fact that what happened here is that after the huge selling day, selling day, now we're at about 2:30, and we have two big green bars, okay? So the trade which I didn't take, okay, the trade here would have been, okay, this is the trade we could have taken, was the two green bars, so sustained buying pressure, so a 50% pullback of that, and I think it missed it by one tick, but when this bar went down here, okay, have a limit order here to buy, and you could have gotten out. I don't know where you would have gotten out, but that was a good buy, and you would have had plenty of opportunities to get out with the profit on that trade. But since I did not take that trade, then I'm watching this price action, okay, and what I saw, okay, what I saw here that was very notable is something I call a bull trap. So let's think about the psychology of what's happening here. What's happening here is this. Bull bars, okay? They bought the 50%. And then they have another bull bar, and this is really important, okay? Another bull bar closing at its absolute high. In other words, the bar closed at the highest point that it was. So now the bull's like, wow, awesome. Let's buy this because where we now have this is a continuation of this. But what happens, so first of all, this is resistance. Okay, so this was resistance right here. So this was a support. It became resistance here, and then resistance here, resistance here. So now what I was looking for, because I was actually considering this long as well, but this is what actually flipped me from long to short, is because right when this bar closed, they started selling immediately. Look, if you see, there's actually a small gap here. There's a 40-15. There's a, so it didn't even, it traded lower immediately, and it went down. So I ended up getting short somewhere towards the bottom third of this bar, and this was the bull trap trade. Basically, it trapped all the bulls, and now all the bulls that bought there have to get out. And so we never know how far a trade's going to go. So I managed this trade. We had another bear bar, but now we're starting to find supports. Now at this point, I had a finger on the trigger to get out, and then they put this bar in, and I was ready to get out if they started going higher here. But what they actually started doing was they actually took the market down. So at one point, this was a big red bar, but then they closed it up here. So right after this bar closed, if I saw any buying whatsoever above this, I would have gotten out immediately, and I believe that's what happened. Yeah, so I ended up getting out like right around here. So it was a scratch trade. I think I lost a little bit on it. But so today really, and then, so this is so today's price action was basically a distribution day, which turned into a trading range here. And so now we could start actually preparing for tomorrow. Let's go ahead and put in the low. Okay, so this is going to be, when we log in tomorrow, that's going to be yesterday's low. And then let's go ahead and put in today's high as well. So we're going to put in today's high. When we come in tomorrow, we already have those numbers in, or I should say yesterday's high, because when we come in tomorrow, and because I mean, the way I look at the market is I'm always cautious on the first trading day of the week. We had a holiday yesterday, so today was the first trading day of the week. And this is like a story. It's like a soap opera, right? So right now we're in a situation where, so I always look at the open of the week. Let's make this, so the open of the week is important because as the week comes closer to a close, traders are looking at that number and they're saying, okay, now where are we going to be closing the week as compared to, so we have, yes, so this is going to be the high of the day, that's the low of the day, and then we have the open of the week. All right. So yes, I mean, I'm always looking at the market as an ongoing, because guess what? The same traders that showed up today are going to be here tomorrow. So we have to be cognizant of the fact that, so this is kind of like an expanding wedge. So we're down here and we're closer to support than we are resistance, right? You could see that. So we have to just keep that in mind. Now, that doesn't mean that we can't go lower. It absolutely does. But would I be surprised if we ended up the week somewhere up here? Why would I be surprised? We were just there last week, right? This is and this is what's oftentimes the market looks at its worst at support, and it looks at its best. Like, look at the market up here. The market looked great up here at resistance, and what happened? We sold off. So and again, this is not me predicting. I'm just telling you what happens is that when the market looks green bar, green bar, green bar, and then we sell off, okay? Looks really, really bad, and then buying, right? So that's why we look at the market as an auction. The market is constantly looking for the best equilibrium price, and this new news, new information. So that's why the market, or else the market would just trade in a flat line. So right now we're at a critical state in the market. We're going to see what happens. We're going to see what happens tomorrow. I'm prepared for a move up, and I'm also prepared for a move down. So just because I did not trade on the short side, I mean, I took one trade on the short side, but I didn't catch most of the move today, that's okay. Hey, that's going to happen. We're going to be patient. We're going to come back tomorrow, and we're going to do it all over again. Have a great day. Trade well, and manage your risk.